Good day, Junior Tickies. I'm Mrs. Brimacombe. We are going to look at Chapter 5, Activity 3. We're going to look at another way in which the income statement could be asked, and we're also going to complete the balance sheet. In this activity, we're slowly going to introduce financial indicators, which will form part of our next chapter, Chapter 6. Here we're looking at how financial indicators can be given, and you need to find the missing figure. This is very important to understand, especially in grade 12. Buxton Limited is a public company with an authorized share capital of 1.8 million ordinary shares, authorized maximum. The information relates to the financial year ended 28 February 2021. If our accounting period ends 28 February 2021, it means it starts the 1st of March 2020. Required: fill in the missing amounts on the income statement provided, complete the notes to the financial statements, the ordinary share capital and the retained income, and then complete the balance sheet. Very important, always show your calculations in brackets to earn part marks. Remember, if your final answer is correct, you get full marks. If your final answer is wrong, you lose all the marks. They provided us with an extract of the pre-adjustment trial balance on 28 February 2021. And then we're looking at additional information. Please take note of point number 5. The following adjustments must be considered for the balance sheet only. When we start with this activity, we always look at the information from the pre-adjustment trial balance and we fill that information everywhere it's supposed to go. We're going to fill it in. And again, like I've said in the previous activities, make sure that you tick it off on your question paper so that you ensure that you don't leave out anything. Make sure that you know your formats. So starting with the income statement, we are going to take everything from the pre-adjustment trial balance and we're going to take it where it's supposed to go. Be careful with ordinary share capital because you always need to look at the movement. Did we repurchase any shares? Was any additional shares issued? And then very importantly, was it recorded or not? Because that will have an impact on where do we take the balance from the pre-adjustment trial balance. Retained income note. They specifically said to you from the pre-adjustment trial balance, the retained income in the beginning of the year was 480,500. But if you have a look on the note, they provided that figure to you and they provided the figure at the end. If you look at dividends on ordinary shares, it's an expense, but it forms part of the distributions of profits. And this is why we're going to take it to the retained income as interim dividends. With the balance sheet, we're going to do exactly the same from the pre-adjustment trial balance. Write where it's supposed to go and write it in brackets. Be careful with SARS income tax. Why? SARS income tax can either be an asset or a liability. From the pre-adjustment trial balance, SARS income tax was the provisional tax payment. So we still need to take into account what was the income tax for this accounting period to see, do we still owe SARS or does SARS owe us? Make sure that you show your calculation. I suggest that you draw a T account. We can now start with the adjustment. Now, like I've mentioned before, don't just focus on one question at a time. When you look at the adjustment, make sure that you make the necessary adjustments wherever you need to make it. If it's the income statement and you need to go to the balance sheet, do it at exactly the same time. If we look at the loan statement received from Sunshine Bank, showed the following. So we have an opening balance, the repayment, and the closing balance. They say to you, provide for interest on loan. This means we need to show the interest expense in our income statement, but we also need to take it to the balance sheet. There's different ways in which we can approach the balance sheet. I'm going to do the following. If we start with the 90,000 of the loan will be paid in the next financial year, whatever is paid in the next financial year must be subtracted from the long-term liabilities, and it's taken to current portion of loan. So we say 320,000 and we're going to have minus 90,000. Where do we take it? Current portion of loan. To calculate the interest, we work from the bottom, we work our way up. Remember, if you're not sure how to do it in this way, you can always do a T account. So to work out the interest, we are going to say 386,000 plus the repayment during the year, which included the interest, minus the balance at the end. That equals the interest of 66,000. So if I now take my calculations and I show it on the balance sheet, we have 320,000 plus the interest minus the current portion of loan. On the face of the balance sheet, you could have also just taken the closing balance minus the current portion of loan, the 90,000, and that will equal exactly the same answer. Income tax for the year was calculated at 28%. They provided you with the net profit after tax. So I can calculate the income tax and I can calculate the net profit before tax by saying, if the net profit before tax equals 100 minus 28%, it means that the net profit after tax equals 72%. So if I want to calculate the income tax, we're going to take the net profit after tax times 28 divided by 72. This must be in brackets because we're going to subtract it. If we now look at our provisional tax payment, we paid 290,000, but our income tax for this accounting period is more than 290,000. This means that we still owe SARS, and the difference, 13,968, that belongs in your balance sheet. Now, they haven't asked you to open the trade and other receivables or the trade and other payables. So it means that whatever your calculation is, if we owe SARS or if SARS owes us, it must appear on the face of your balance sheet and your calculation must be shown in brackets. If we owe SARS, it means it needs to go to your current liabilities plus 13,968. Now, before we go on to the next adjustment, we can calculate the net profit before income tax. We can take the net profit after tax plus the income tax equals, or you could have said the net profit after tax times 100 divided by 72. We've calculated the net profit before income tax. We've also calculated the interest expense. This means we can now calculate the net profit before interest expense. We calculated the net profit before income tax. We've calculated the interest expense. Now we can calculate the net profit before interest expense by simply adding the interest expense to the net profit before income tax, and that equals the net profit before interest expense. Fixed deposits. One of the fixed deposits, 61,500, matures on 30 September 2021. The rest matures in 2022. This means 30 September 2021 is in the next accounting period. Whatever matures or is paid in the next financial year must be taken out of our non-current and shown into our current. So if the fixed deposit matures, it means that we're going to minus that 61,500 from the fixed deposit, and we're going to take it to cash and cash equivalents, 61,500. The total for our fixed deposit will now be calculated 200,000. And if I look now on the income statement, then didn't say anything about interest that must be calculated on the fixed deposit. And secondly, they provided to you the operating profit, and you've calculated the net profit before interest expense, which means the difference is my interest income, which is exactly the same as the figure from the pre-adjustment trial balance, 31,600. The following percentages were calculated at the end of the year. The operating profit as a percentage of sales and the gross profit percentage. This is where the financial indicators is now given to you, and you need to find the missing figures. If I look at the income statement, the operating profit is given to you, and they said it is calculated 8% as a percentage of sales. So to calculate the operating profit as a percentage of sales, you take the operating profit divided by sales. Remember now, financial indicators, a formula sheet will be provided, but you still need to make sure that you study your financial indicators. So if I look at this, the operating profit is given. I want to calculate sales, which is now my X, times 100 equals 8. So to find X, we have to say the operating profit times 100 divided by 8. My sales is equal to 14 million. To calculate now the cost of sales, we are going to use the gross profit percentage that was given to you, 40%. To work out the cost of sales, it is times 100 divided by 140. Now we can calculate the gross profit. Sales minus cost of sales equals gross profit. Plus other operating income, which was given to you, equals gross operating income. Now we can find the missing figure, operating expenses, by taking the gross operating income minus the operating profit. I'm going to remind you, look at my approach. It's about taking the information where it's supposed to go, fill in the missing figures, or find the missing figures. From the income statement, we are now complete. From here, you need to remember you are required to complete the retained income note and the ordinary share capital note. So from here, the net profit after tax always goes to the retained income note. Point number 5, the following adjustments must be considered for the balance sheet only. The rent for February 2021 was not yet received. The vacant storage space was rented out since 1st of November 2020. What is important to remember here, our accounting period ends 28 February 2021, which means that it starts the 1st of March 2020. Don't assume this is for 12 months. It was only rented out from the 1st of November. To find out the rent, which is still outstanding, we have to take 54,900 from the pre-adjustment trial balance, and we're going to divide it by 3 to find the missing amount for the month of February. Because this is accrued income, rent received, rent still outstanding, and income that is outstanding must go to trade and other receivables plus 18,300. An additional insurance policy on vehicles was taken out on the 1st of August 2020. The annual premium of 13,440 was paid. Annual means it was 12 months. So what do we need to do here? Whatever falls outside of our accounting period must be taken out, and this is an expense, so it means it needs to go to prepaid expense, which forms part of my trade and other receivables. If you look at your calculation, if 7 months should be included, it means 5 months should be taken out. This is why we're going to take 13,440 and we're going to times it by 5 divided by 12. 5,600 must be taken out. So we're going to go to trade and other receivables, prepaid expense plus 5,600. Provision for bad debts must be adjusted to 4% of the debtor's control. Provision for bad debts is always subtracted from the debtor's control. We are going to take 128,000 times 4%, and that will be minus 5,120. Directors' fees of 9,000 was still outstanding on 28 February 2021. If it's still outstanding, it means it needs to be added. This is an expense, so it will go to accrued expense, which forms part of trade and other payables, plus 9,000. Before we go to the last adjustment on share capital, what can we complete on the balance sheet? We can calculate the fixed assets. There were no change. Fixed assets plus fixed deposits equals the non-current assets. We've got inventories. There were no adjustments with inventory, so we're just going to add those two. We're going to total trade and other receivables. We are not going to close off cash and cash equivalents yet. We don't know if there's repurchase of shares or additional shares issued and if it has been recorded or not. What else can we close is the trade and other payables equals 74,968, and we're not going to total current liabilities yet, because final dividends recommended at the end of the accounting period must go to shareholders for dividends, which goes to your trade and other payables. If I look at share capital, on the 1st of March 2020, 800,000 shares were in issue at the beginning of the financial year at an average price of R4 per share. 31 October 2020, 200,000 additional shares were issued. This has been correctly recorded. 31 January 2021, the business bought back 50,000 ordinary shares for R6 from disgruntled shareholders. This transaction was not taken into account. These shareholders do not qualify for final dividends. 28 February 2021, 950,000 shares in issue at the end of the year. So looking at this, I always use a T account as a tool to see what information do I have got and where can I find the missing figures. So if I start with the balance brought down, we have 800,000 shares in the beginning. Additional shares were issued, 200,000. 50,000 shares were repurchased, and the total price was R6.600 per share. I can take that now to my note, and I'm going to say 800,000, 200,000 minus 50,000 equals the number of shares in issue at the end of the accounting period. Now, they specifically said to me, 800,000 shares were in issue at R4 per share. That was the average price. So we can calculate the balance in the beginning by taking 800,000 shares times 4 equals the balance at the end. We paid in total R6.600 to repurchase 50,000 shares. This transaction was not taken into account. This means cash and cash equivalents, we need to say minus the total repurchase price of the shares. The additional shares were correctly recorded. This means we can now total the cash and cash equivalents, and now at the same time we can calculate the total current assets, non-current assets plus current assets equals my total assets. Now this is something non-negotiable that you should know. Total assets must equal total equity and liability. So you can immediately take the same amount that you've calculated in your total assets must go to total equity and liabilities. If I look at this question now and the information in front of me, it's clear I cannot solve the ordinary share capital note. I don't know what's the figure at the end. I don't know what's the average price because I cannot calculate it after the additional shares was issued. This means that I will need to look at the balance sheet first. See if you can find any figures there. If I look at number 4, a final dividend of 48 cents per share was declared on 28 February 2021. This must be taken into account and will be paid after the AGM in April 2021, which means that is in our next financial year. This must go to shareholders for dividends. So to calculate this, remember what it said when we repurchase shares. These shareholders do not qualify for final dividends. If they do not qualify, it means we need to use the balance at the end, the 950,000, and we're going to times it by 48 cents. So our shareholders for dividends is 456,000. Remember, this must also go to your retained income note. But before we take it to the retained income note, I can now calculate my current liabilities. So if I've got my non-current liabilities, my current liabilities, and the total equity and liabilities, I can calculate the total shareholders' equity. If you look at your shareholders' equity now, I've got ordinary share capital and I've got the retained income. Remember, On your answer booklet, the retained income was given to you at the end. If the retained income is given to you at the end, we are going to take the same figure to the balance sheet. Now we can take the shareholders' equity minus the retained income equals my ordinary share capital. So I know now that my balance for ordinary share capital at the end is calculated at 4,940,000. So if I look now at what is given to me and what we've calculated, the net profit after tax was given to you from the income statement. They told us 50,000 shares were repurchased. We calculated the final dividends recommended. Interim dividends was given to me. So this means that my total dividends on ordinary shares can be calculated. So again, I filled in all the information which I've got. This becomes now the balancing figure, the repurchase of the shares. So we can take now, starting from the bottom, working our way up, we're going to say plus, minus, minus equals the total repurchase of shares, the amount above the average price. This equals 80 cents. So if I look now at the total repurchase price, it was 600 cents, 6 Rand. Minus 80 cents equals the average price. If we take 300,000 minus 40,000, it equals 260,000. I hope you can notice the different options now that is available to me to solve this. So now I'm going to take that amount immediately to the repurchase, the total in brackets 260,000. Another option that was available to me is by taking that figure, the ordinary share capital at the end, divided by the number of shares would provide you with the average price. And that average price would be exactly the same as the repurchase price, the average price. This is another option available to you. If you understand the basics, it becomes so much easier to solve these type of questions. Now I can find the missing figures. If I look on my T account, the debit side plus minus the figure in the beginning equals the additional shares that was issued, and the total price was 2 million. Now I can complete the note. Thank you very much. In our next activity, in activity 4, we are going to look at the cash flow statement. I want to leave you with this quote. If you really want to do something, you'll find a way. If you don't, you'll find an excuse. I hope you have a wonderful day.